Daddy born poor, Mama was too. Walking through the snow, plastic bags on their shoes. Papa selling houses, sleeping in a car. Four babies in the backseat, underneath the stars. Well, hey, hey, let's work a little harder. Hey, hey, punching that clock with work and prayer and a little bit of luck. Make so much money, need a 10-ton truck. Ha, 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 ha.
Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So glad you could join me this Thursday morning, December 8th, 2022. Here at Forex Smart Trade, our mission is to help you along your journey to financial independence. And we do that by teaching you how to currency trade using our highly accurate proprietary trading indicators that I consider to be the best in the business. And we supplement that with a personalized one-on-one training, which we think is really the most efficient and effective way to learn currency trading. Currency trading is hard, but when you have the right tools and instructions, person showing you, it becomes doable. And part of that goal is we're here to help you become the best version of yourself, so that you're not in that struggle to try to make ends meet, to be able to be in a position to buy whatever you want when you want it, to not have to work 12 hours a day to just get by, so that you can structure a life that's worth living and that has time in it to do the things that you find enjoyable, so that it's just not all work. So with that, let us get into it. We're going to start by listening to this guy. And as oops, where'd he go? Oh, we go over here.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
One of the great things about the program is, as I said, the personalized one-on-one training. We do sessions like this where we have an experienced trader come online. While you watch, they do their analysis, so it's a teaching moment. And then as a give back for your investment of time, we give you a trade that you can copy if you agree with the analysis. When you become a regular member, we have a session at 10 a.m., which tends to be a little scalp session. And then again at 10 p.m. Eastern time. This tends to be a little bit greater pip trade where they're going for 10 or plus pips every win. And again, one of the keys to being successful is in our system, we are so confident in how well things work that once we've trained you, we'll let you trade with our cash and split what you make. And part of kind of getting you to be better is the accountability that comes with that system. We do continuous training where every Wednesday evening we have a training session, and every Saturday morning we have a training session. I work off of a little checklist that helps keep me focused. And every morning when I get started, I restart my green charts just to make sure that they are clear out the memory and that they operate fast, especially since I've got a lot of things turned on and I'm using a lot of RAM. The end of every day, it is good to review what you did that day to look for areas of improvement, specifically the trades that didn't do what you expected them to do. Last night, every evening I send out a couple, I've been sending out a couple of trade setups. If you had followed both of them, they both closed profitably. One closed early, and then the other one closed a little bit later. You don't see how I came up with those trades. They are basically using the signal that we're going to be using now, but on the day chart. And if you go to the YouTube library, there's a place where you can find where I've done a month of the trades on the back testing on the Euro USD to show you what I'm looking at when I take the trade. We are technical traders, which means we are trading based on the price action. And our indicators are very good at determining the direction of the move. So with that, but price action isn't the only thing that determines currency prices. News impacts currency prices. So we want to know what that news is. And one of the better places to take a look at that news is Forex Factory. .com. Forex Factory breaks the news into three categories: yellow, which is low impact, orange, which is medium impact, and red, which is high impact. And it's the red ones that I want to worry about. And I try to stay out of the trade a couple hours before. So tomorrow we'll get some red items on the USD at 8:30, which would mean by 6:30 I would not want to be holding any pairs with the USD in it. This morning it looks like we've got clear sailing. So with that, let us go ahead and take a look at the analysis. The trade I am going to do is something called the 10-point trade signal. But there are over a dozen signals, and we're going to create a trade plan to work for you that's based on your preferences and risk tolerance that kind of maximizes your style. Different people have different styles. For example, I don't, the 5-minute, 1-minute trade that we teach in the trial, that trade's not for me. I don't have the patience or I don't have the patience for it. I don't want to sit in front of the computer for extended periods of time. The 10-point trade off of the 1-hour chart, and you can do this off of any time frame, but I like the 1-hour chart. I like to be 30 minutes into the chart to take the trade, which we are right now. We're about 40 minutes in. And this trade is going to be worth anywhere from 5 to 35 pips. And my sweet spot tends to be 10 to 11 pips. And I expect it to close within 1 to 3 hours. The only difference on that, that's when I'm trading off of the 1-hour chart. For example, when I trade using the overnight signal, I'm expecting that to close 2 or 3 in the morning. So we're looking to be 6 hours into it before it executes. And really what I'm trying to do is just get the lines on the chart to line up. And when I get lines from all 3 sections to line up, I've got a trade that's got a high probability of doing what I expect it to do. So with that, let's get into it. The chart I'm going to be trading off is one of the standard charts. It's a light 6 major. I consider it a composite chart because it is showing me 6 different currency pairs. On this first chart, it's all US based. And I am going to look for situations where I'm going to start with the middle section of the chart. And I am looking, in the middle section of the chart is called the majors and minors. The red and green line is the major indicator. The black and gray line is the minor indicator. Horizontal red line is what we call the oversold line. Horizontal blue line is the overbought line. And the chart just graphically represents when the market gets overbought. When it's overbought, it is a good time to sell. So here on the Australian USD, overbought, lines going down, that's a good trade. And you can see the next two candles were going down. I want to catch a trade overbought with the lines going down, or oversold with the lines going up. Can I get a buy trade when we're overbought? Yes, I can. Can I get a sell trade when we're oversold? Yes, I can. But based on my trade plan, where I want to minimize the things that could go wrong with the trade, I want all of these lines lined up and going down, or all the lines lined up and going up. So here we're in the middle of the channel, or a little bit actually past the middle of the channel, approaching overbought. So I don't have that situation, so I'm just going to pass. Euro USD, again, we're in the middle of the channel. Majors coming down slightly, minors going up slightly, so I don't have agreement, so I'm going to pass. Pound USD, oversold. Minors going up slightly, majors going down slightly, so again, no agreement between the majors and the minors. Dollar, Canadian dollar, just reaching oversold with everyone going down. Dollar Swiss franc, we've just kind of touched the overbought and everybody's going sideways. So again, no agreement. USD yen, we're in the middle of the channel. Minors are coming down, majors are sideways really, so I'm going to pass on this. I'm not crazy on taking a trade where we haven't, where the major indicators haven't gone all the way to the oversold spot. For example, where it turns in the middle of the channel. I want to catch it up here and then ride it all the way down through here. So you can see, for example, and I caught this yen trade 5 hours ago. This was worth 45 pips had I caught this up here. So I could have easily got 10 pips out of it. And that goes back to that 5 to 35 pips within off of a 1 hour chart in terms of what a trade can do. So we got nothing on this chart. So what I've done is I've cloned the chart, and I've got different currency pairs to take a look at. This grouping is non-US based. Euro pound overbought going up. Australian dollar yen overbought. It's starting to turn. Majors are sideways. Minors are coming down a little bit. But at this time of day, it's approaching evening in Australia and Japan. So I don't want to be taking a trade off of a 1 hour chart when it's evening time. It's going to take longer to execute. And again, part of my trade plan is that I want to get in and get out. Ideally, I don't want to be in a trade for longer than 3 hours. Euro Canadian dollar oversold, majors still going down, minors have turned, so we don't have agreement. Australian dollar, New Zealand dollar overbought, everybody's starting to turn. Minors are coming down. Majors, we don't have the double cross yet. Double cross is when the red line is crossed over the green line. We do have the black line that's crossed over the gray. So I don't have one of the elements of the 3 points that I'm looking for. Plus, it is evening time in both of these markets. So as part of my trade plan, I don't want to trade evening time off of the 1 hour chart. Pound yen oversold and going down. So we're going to pass. Euro Australian dollar oversold. Majors still going down, and minors have turned. This little what we're looking at the majors is an upside down duck bill. This usually means there's a little bit more down to the move. So nothing there. Let's go. Keep looking. Canadian dollar, yen overbought, sideways. Euro New Zealand dollar overbought. Everybody's still going up. Pound New Zealand dollar. We theoretically have the signal here. We're oversold. Everybody's going up. It had gone up. It kind of changed direction in the circle, but now in the channel, but now is going up. So I theoretically have 3 points here. I don't like the slope of the green line. Slope of the green line isn't steep enough for me. It's less than 45 degrees. I want to see it more than 45 degrees. Usually when I get the 3 points, and you can see it's kind of maybe going sideways. When I go up to the TNTs, I don't have any support for a buy trade that I'm kind of seeing here. Thick orange line is flat. Thin orange line is going down. Thick blue is going down, which means buy. So I only have one of the 4 telling me to buy. So I'm going to pass. I want to have at least 3 of the 4 telling me to buy. Pound NZD yen oversold and going down. And this looks like this might be some news related item. I don't recall seeing any news. Let's just take a look here. No news there. But that usually when you see a big move like this, it's something news related. New Zealand dollar USD oversold going down. Euro Swiss franc majors are kind of overbought going down. Minors are oversold going up. So we don't have agreement. So we're going to pass. Let's go on to light major 4. Again, disagreement. Australian dollar, Canadian dollar, majors going down, minors going up. Swiss franc, yen, everybody going, we're just reaching oversold. Everybody's going down. Euro yen, disagreement again. Majors going down in the channel, minors sideways. Pound Australian dollar oversold. Majors sideways, minors up, so nothing there. New Zealand dollar, Swiss franc, oversold going down. And Canadian dollar, Swiss franc, overbought, majors going up, minors have started to turn. So no agreement. So we've just gone through 24 charts and did not see a good setup. And that happens sometimes. So what I'm going to do now, one of the good things about the program is we have multiple signals. So this I'm going to change signals, and I'm going to look at a different signal called the thick orange line signal. On the thick orange line signal, again, with that 10-point signal, you can do it off of any time period. With this thick orange line trade, it's really, I find it best off of the 1-hour chart. You can do it off of a 30-minute chart, but I don't. So I'm not as comfortable in recommending it on the 30-minute chart. We want to do it when there's at the top of the hour, when there's less than 5 minutes left in the hour. So right now you can see we've got 10 minutes left in the hour. So we'll scan the charts, see what we see, and then when it gets to 5 minutes left in the hour, we'll take the trade. And basically what I am looking for is the position of the thick orange line, and I want it to be either at 0 or 10 or 1 point within 0 or 10. So let's go ahead and take a look. So here's the thick orange line. And this number here is the position of the line is a scaled position. And what I mean by that is that when it's as high as it can go, it will go to 10. And when it gets to 10, it's saying, hey, I don't think there's any more up in the movement. And likewise, when it's as low as it can go, it'll go to 0. And when it goes to 0, it thinks that, hey, this move is maxed out. There's no more down in the movement. If there's no more down in the movement, that's a good time to buy. So I am looking for this to be 0 or 10. And then when I see it's at 0 or 10, I'm going to confirm it by taking a look at what the majors are doing. So let's see if we can find a 0 or 10. So 8 isn't close enough. 2 isn't close enough. 5 isn't close enough. 4 isn't close enough. 4 isn't close enough. 1.1, that's a little over where we want to be. I want this to be less than 1, between 0 and 1. So let's just go back. We'll look at the 6 major 3. 5 isn't close enough. 1.2 isn't close enough. 0.9 is close enough. That's within 1 of 0. 0.9. So I've got the first part of the test that I'm looking for. So this is within 1 of 0. Then I want to look for where the position of the majors are. And I want the majors to be well below the red line, and indeed they are. The red line is almost 3/4 of an inch below this. So I've got part 1 and part 2. This trade is worth 5 pips. So the next thing I want to take a look at is I want to see what the spread is, because if it's worth 5 pips, I don't want to pay more than a pip, in the spread. So let's take a look and see if we've got New Zealand yen. I've got the New Zealand yen here. And the spread is 7.170 to 8.8. It's almost 2. Almost 2, 1.5. Almost 2 now as we're looking at it. The spread is 2 pips. 76 to 78 or 75 to 77. On a 5 pip trade, paying 2 pips, I've got to give up 2 pips to the broker to get back to break even. That's a little bit too much. I'm paying 40%. So even though I got the signal here, I'm going to pass. What happens is when this is at 0 and these lines are down here, when the candle changes at the top of the hour, there's going to be a bit of a snap, and we're going to catch that snap, and that snap is worth 5 pips. So kind of easy peasy, no calculation involved. But I don't want to, the economics of the trade need to be right too. So when the spread's that high, this trade isn't good for that pair. Pound New Zealand 7 isn't close enough. 6.3 isn't close enough. 8.3 isn't close enough. $1.7 isn't close enough. 4 isn't close enough. 8 isn't close enough. 1.6, I'm looking for 0 or 10 or within 1.7 isn't close enough. 3.9 isn't close enough. So let's go back to our last chart. 6 isn't close enough. 7.3 isn't close enough. 2.7, no. 3.5, no. 6.3, no. Well, we did an 0 for 48 this morning. We've gone through 24 pairs twice with two different signals, and I didn't see a signal that was worth trading off of. And that sometimes happens. And if you had followed last night's trades from the daily trade setup that I got, and if you're not seeing it, check your spam. You would have been 25 pips, and 25 pips, that's good for a day. You don't need any more than that. If you do 25 pips a day, you are going to be earning a lot of money. So if something else happens to come up, we'll keep an eye on it. But right now, there's nothing here this morning. Let's see if there are any questions. Let's see here. I've got a question on hedging. On hedging, I don't do that in these sessions. It's you've got to be kind of an experienced trader to hedge. But usually, when I do hedge, I'm going to be, if it starts to move about 10 pips in the opposite direction, I will consider hedging. A hedge is when you take a buy, say you have a buy trade, and it starts to move. It starts to move down. You would then take a sell trade. So basically, you're locking in whatever the loss is, and then once you've locked in the loss, then I'm going to look for an opportunity to hedge, to price average out of it. So I'll either double up on the sell, or I'll take a buy and then price average. Once it gets to a certain point, you can close out all the trades. Let's see. I have added the pound yen to the overnight trade. I am not trading the pound yen usually during the day. I'm not usually trading that, but for the overnight trade, I am doing that to give a little diversity. So we've got 4 different pairs that we're focusing on. The signal that I use I'm using the signal that I use on the Euro USD. However, the stop loss on that on the Euro USD trade, I'm usually using about a 3-to-1, just a little bit over a 3-to-1. If I'm going for 11 pips, I've got a 35 pip stop loss. That stop loss is too tight for the pound yen. The pound yen bounces; it's got more volatility in it than the Euro USD. So if you try to use that same 3-to-1, you're going to get stopped out. Now, however, if I am going for 11 pips on the pound yen, I will use a 4-to-1 or maybe even a little larger, so I don't get stopped out. But I found what's even more effective is just because it does bounce around so much, to go for say 20 pips and then use a 60 pip stop loss. So 3-to-1, but because I'm going for more pips, it's rare that you'll get stopped out on 60 pips. So that has been what I've been doing. Let's see. All right. So can I share your rules, please? You can copy them. Well, here you can look at them real quick. Or you know what? Just email me and I'll send them to you. Okay, gang. Thanks so much for being here. We'll do this again Monday evening at 6:30 p.m. We do 1 in the evening and 2 in the mornings. I tend to be a morning trader. If you have specific questions, you can schedule some time with me. Go to forexsmarttrade.com, forexsmarttrade.com/schedule, and you can get some time with me. All right. Thanks so much. We will see you on Monday.